Hi everyone, this is Rohit from Lifestyle Mastery, and today I'm excited to have Gaurav Gulati, who's the founder and managing partner at Aroha Venture Partners. He's a serial entrepreneur who had founded Innovate, which was acquired by Oyo Rooms. And at Aroha Venture Partners, he leads a mission-driven VC firm backing startups that deliver strong returns and meaningful impact. Welcome to the show, Gaurav.
Thank you so much, Rohit. It's a pleasure to be here, and I look forward to our conversation.
Awesome. So you've had an interesting journey. We've had a discussion about your journey from the US and then India. But how did you get in your start in this crazy world of startups?
Well, that's a really long story, and I certainly don't want to take up the whole hour discussing that. But the long and short of this is that it all started with the desire to do something different. And I think what had the most profound impact on me was my business degree at the University of Chicago Booth School of Business, and a few professors there that had a massive impact on the way my thought process evolved. So this was late 2000s, graduated in 2008. 2000, post that, we went through a financial crisis. A lot of things were coming to mind about what one could do. And there was this aha moment saying that, hey, India is in a very interesting juncture. Would it be interesting to look more closely and deeply at what one could do in India? And that was the beginning. And here, a fun fact, I started this VC firm in 2020, exactly 10 years after I landed in India to actually do exactly this.
Nice.
And the first person that I ever pitched my plan to start an investment firm was a gentleman that you probably are aware of, Professor Raghuram Rajan.
Oh, nice.
And this was 2009. And obviously he was very bullish and optimistic on where India was headed. So, yeah, landed in India back in 2010 and ended up starting the firm in 2020. So I'll be happy to answer more questions, but it's been a very interesting 15 years.
Interesting, and you also did mention that you're born in India, in fact Islamabad, and you lived across 5 countries, and you lived in the US. So I've also lived in the UK, but how does that global perspective shape your approach towards venture capital and how startups grow in India?
See, I think my growing years have certainly have had a profound impact on my ability to relate to people, relate to different circumstances, relate to uncertainty. But just a quick correction, and maybe this is TMI. I don't know how my parents will feel about me sharing this, but I was conceived in Islamabad, but I was born here in Delhi.
Oh, is it? Okay, okay.
So grew up across the world. You mentioned 5 countries. So, back then it was Czechoslovakia, now Czech Republic.
Nice.
Spent time in Malaysia, then Argentina, and then ended up in the U.S. And lived across these countries 4 years.
Oh, okay.
Now, this is something that I tell people. Imagine, back then we didn't live in the day and age of instant messaging. There was no Facebook, etc. Imagine throughout your childhood, you're building strong relationships, meaningful bonds, every 3 to 4 years, but then you're saying goodbye, right? So you learn to understand. I wouldn't say that's failure, but you learn to understand and cherish and be present in those moments, really enjoy them, and then you learn to let go as well. But I think all of that has had a significant impact on me. And then I spent nearly 2 decades in the U.S. So
Right.
obviously, growing up in the U.S., did my high school, undergrad. Undergrad was in computer science,
Okay.
and grad school, obviously, University of Chicago. So very diverse background. Have dealt with a lot of uncertainty.
Right.
And when you're dealing in the startup world, if you're not comfortable as an entrepreneur or as an investor, if you're not comfortable with uncertainty,
Right.
it's a very, very difficult space to operate.
Right, and when you came to India, you worked as an operator in Innovate as well as Purist. And so how was your experience? Because you also had a huge exit from Innovate as well.
Yeah, so look, I landed in 2010 in India. I didn't know anybody in India. So I never lived in, I never grew up in India.
Yeah.
Obviously, we would come for vacations and stuff, but I actually didn't have any network. What I really leveraged was my alma mater. So University of Chicago, our university had actually a alumni group, which
Yeah.
over the years we grew it significantly. So step by step built that out. Started experimenting with ideas around investments and different sectors. Uh, I had a thesis across four specific sectors, and the idea was to start investing in businesses in each one. Very early, I realized instead of investing in them, why don't it was too early, 2010, 11. Why not start building each one?
Okay. Okay.
But yeah, it's been partnering with Ritesh Malik at Innovate was an incredible experience. I think I think we pulled it off in a pretty incredible way. And when it comes to Purist, I was actually supporting my ex in her business, and
Okay.
she was the main founder and CEO. That exit happened to PureFit.
Right. Okay.
So very, very interesting outcomes, and all of these happened in the period 2017 leading to 2019.
Right. Right.
And after about a year and a half during the pandemic is when the big moment happened where I said now it's the right time to actually rekindle the idea of investing in startups and supporting founders in their 0 to 1 journey. And I think it's really, really important as investors to have an understanding of the operational challenges, right? Because whatever you generally put on spreadsheets based on assumptions, right?
Right. Right.
Operating a business in India is very nuanced. And I have tremendous amount of respect for, our entire founder community who has built businesses of a very large scale. Whether it's a Lenskart or a Pine Labs or a Hoyo, Zomato, you name any of these, right, across sectors. I'm not commenting on their profitability, etc., but what I am commenting on is that building something of scale in this country, it's not as easy as in other parts of the world.
Got it. And you mentioned about starting Aroha Venture Partners in 2020. So what was the original thesis for Fund One?
Great question. So it started with kept a very open mind, right? Because
Okay.
it was going to be the initial fund.
Right.
It was going to be the playground, and the idea was to experiment in a meaningful way and not box ourselves in specific sectors.
Okay.
And that itself was a hedge, saying that why at this moment unnecessarily limit the opportunities that we can assess.
Right.
It was about access, because one has been in the community, you got access to good opportunities, and experimented with four theses. One was early stage buyout. Guys who had just started their businesses, had just done maybe a seed or a pre-seed round, not operationally profitable yet, but one saw that there was an opportunity to acquire it, fix it, basically do what later stage private equity firms do. Can we do that with early stage, at the early stage? So experimented with that, did a whole lot of pre-Series A, Series A deals, and then the last experiment was, before it became popular, the pre-IPO strategy. So we did a pre-IPO strategy. So if you look at the portfolio in Fund 1, it's not like massive exposure that we took, but still meaningful exposure and companies like MPL, Cred, Pine Labs, Urban Company, Zetwork. These are all companies that are lined up for an IPO, right? So, but we made these investments 3 to 4 years ago.
Okay.
So great learnings. Ended up making about 40 investments. Fund 2 is a very specific strategy.
Okay.
And Fund 2 is truly an institutional fund. It is a SEBI-registered Category 2 fund. We have institutional capital. We have support from the government of India. Their central government's fund-of-fund scheme. They are an investor in the fund. The state of UP is also an investor in the fund.
Okay.
And then other known names from the industry.
Got it. And what is the name Aroha Venture Partner? What does Aroha mean? And how did you come up with this term?
Great question, because it's very personal for me.
Right.
Look, I mean, you look at the last. I'll just take a step back and see what has changed globally over the last couple of decades, right?
Right.
If you rewind back 3, 4, 5 decades, there used to be one, call it a black swan event or a major macro event that would, impact the world. What we have seen in the last, I would say 20 years, if you look at the period 2000 to 2010, we had the dot-com bust and we had the financial crisis.
True.
Right? And then we saw it took a very long time for recovery. Right? And then we got hit with the pandemic. So within a period of say 12 years, you have now 3 major events. And I'm not talking about regional wars and other conflicts, tariff wars that are happening now. I'm not talking about any of that. But significant events that are impacting businesses and across the board, right? So why Aroha? I'm a firm believer that timing, you can never time the market, but timing is very important. Okay. So the word Aroha actually originates from this word called Aro, which comes from the Basque region in Spain, which means timing and era. So the way we look at it, the way we approach our investments, our partnerships with founders is our ability to understand what's happening, have a view on how certain sectors or certain plays are going to work out over the next 4, 5, 6, 7 years, and identify businesses, effectively support them at the right time, partner with them at the right time, and then commit ourselves to them in their journey, and hopefully achieve or get to the outcomes that we think we will.
No, I think that's a super interesting way to look at how do you name funds and startups, and you've been able to found and exit startups like Innovate and Purist. How do you evaluate early stage founders? What comes first for you? Is it team or is it market or idea? How do you evaluate it?
So Rohit, I'll actually ask you a question and then I'll answer.
Okay.
Would you bet on the jockey or the horse?
I'll bet on the horse.
Okay, why?
I mean, if the horse really runs fast, and if he has the ability to run really fast, then there are chances that he could win. But even if it's a great jockey with a weak horse, he might not be able to win. I don't know if that's the right answer.
There's no right or wrong, right? It's just about having a perspective.
Okay.
So I'm saying, every time you're evaluating the startup, right, I always look at it through that lens. Am I betting on the jockey or am I betting on the horse?
Okay.
Right? So look, a great business idea with a not so great team will not be successful. Right? Somewhat decent business idea with a great team can potentially be successful. And I'll tell you why, right? Because rarely do businesses end up being exactly what they started, right? Especially in the early stage, right? Because the whole idea of quote unquote the angel round,
Right.
or quote unquote, the pre-seed, seed rounds. It's all about experimentation, right?
Right.
Everything actually up to Series A. Everything up to Series A is about experimentation. You don't really have the playbook ready. At Series A, you basically have conviction that, hey, I think we have figured out the playbook. And now we want to see whether we're seeking a Series A round, so we can now experiment whether we can scale it to the next level or not. And that scale could be 3x, could be 10x, depending on the sector that you're in, right? That ratio can fluctuate. But by the time you get to Series B, ideally, by the time you get to Series B, you're no longer experimenting on what works.
Right.
At Series B and beyond, what you're doing is now scaling. So the only reason you should actually fail beyond Series B is if operationally you're not able to. You make just, poor decisions from an operational perspective.
Right.
And are not able to scale. So, so the hat that, I and my partners and my team wear when we're evaluating a startup team, it's very different at every stage. Early stage, it's about really I want to know whether there's conviction, right? And the two, I've talked about it on LinkedIn at times. The two characteristics that I look for are grit and resilience. I think those two are extremely important because it's a tough journey, right? I mean, things will go wrong. You at least have to have the conviction in being able to see it through.
Right.
It's not only about valuation, it's not only about ability to raise money. The focus has to be that, look, do you have the conviction? Do you have the ability to actually experiment, figure out, and prove your thesis?
Right.
And you'll be surprised. Maybe you'll not be surprised. I would say 9 out of 10, or maybe 99 out of 100 deals that we look at are actually not startups worth investing.
Those. Okay.
I mean, I could even say the ratio could be higher. It's not set. And I'm not actually commenting on the quality of the founder or the business. I'm just saying from a purely VC perspective, the risk-reward ratio, you're not necessarily looking for $1 billion outcomes every single time. But you at least want the business to have enough, there has to be enough opportunity to be rewarded for the risk one is taking. Right? So I mean, if it's going to become a 1 to 100 crore business, it's great for the founding team. Right? But it limits the ability for an exit from a venture capital perspective.
Right.
And it's not my money, right? I mean, we have a responsibility to our investors. So,
Right. Got it.
sorry, long answer, but hopefully.
Yeah, no, absolutely, it does make sense, and you invest across stages and sectors which you mentioned, but what are some of the risks which comes with multi-sector, multi-stage approach?
The way I look at it is it's a de-risk. We're de-risking by doing that. Right?
Okay.
So it's capital allocation within the same fund.
Okay.
So number of investments that we'll end up making in the early stages will be higher. Just purely from so out of say 20-25 investments that we will make out of fund 2, 20% of the capital is going to go into seed and very early stage, but the number of deals that'll end up happening will be higher.
Okay.
Right, and obviously we'll support them as they're growing, whether it's up to Series A or Series B. But the volume will be higher, the commitment amounts will be lower at that stage.
Right.
But the risk-reward ratio, right? I mean, chances of a business not going bust is significantly higher. And then as we invest in Series A and also Series B and C, like for example, Series B and C, we will never lead a round.
Okay.
But from seed to Series A, we will always lead the round.
Okay.
So we will not invest up to Series A. We will not invest if we're not the lead.
Oh, okay.
Series B and C, we will only co-lead. We will not lead a Series B or C round.
Correct. And you also have like a reserve allocation for.
We do. About 30% of the fund is for follow-on.
Okay.
And that's actually really to support the investments that we have made from seed to Series A.
Okay.
Pro rata shares just to make sure, we're supportive of it.
Right.
Yeah. And from a sector perspective, Fund 2 is we're looking at only 3 sectors: healthcare,
Okay.
renewable energy / sustainability, and the third sector is AI. Now we're looking at the AI stack, but specific plays within that. Not the middle layer, not the foundational layer, but specific use cases. And then on the infrastructure side, we're open to certain ideas. We haven't found an opportunity yet on the infrastructure side, but we're keen on doing something there as well.
Got it. And Gaurav, you've had at least a decade of experience as a founder and operator. How do you support founders post investment, other than giving them capital? Other than that, how can VC support founders?
So, the relationship, it's like it's a courtship, right? So, for lack of a better analogy, I always date for a minimum of 6 months.
Okay.
Right?
Right.
Before investing a dime,
Right.
the courtship lasts from the first hello to the time that the money actually gets deployed. It's actually a minimum 6 months, right? Because it's a long journey, right? You're going to be engaging for years.
Right. True.
But the engagement, if we're moving forward, the engagement is not about, hey, we're giving you money, this is how much equity. All of that is, that's business as usual.
Right.
But we do get involved. I don't know how else to put this, but the messaging to the founding teams is that we're not investors for you. We are your partners, and we are part of the team. Our monthly reviews, unofficial weekly reviews that happen. We actually build the relationship that we end up building is that our team is an extension of your team.
Yeah.
So if we're sitting down and talking, I'm not interrogating.
Right. Okay.
Right? We're building with you.
Right.
So let's put all the emotions aside. We're just building with you, right?
Right.
And some of the feedback that's given is very critical, but it's always with the intent to find a solution for things. So we're very hands-on, not intrusive. The decision to do what they want with the business is always with them. Outside of the reserve matters, right? But that are purely from a guardrails perspective. But what really helps is, the operational background, right? Having been an operator,
Right.
I've been through that pain enough to know that, you can empathize, right? And my whole idea is that what's our incentive? What's our incentive? You want to see the founders thrive. You want to see the business thrive. So might as well be a true partner,
Yeah.
right? I mean, that's the job, right? Not to call in for official reviews and start dinging, hey, you didn't do this, you didn't do that. No, it's more about, hey guys, come on, let's figure this thing out, right?
Yeah. And interestingly, you made this point about monthly reviews. I've seen a lot of talk in Silicon Valley where they say that if a founder sends out a monthly review, there are higher chances that they're on the right track. Does it hold true for Indian founders as well? Do you think most of the founders in your fund should send out a monthly review, a monthly update, even if things are not going well for them?
So, see, from a purely from a transaction perspective, right?
Right.
The guardrails have been established. They have to send it.
Okay.
Right? It's not optional. Right?
Oh, I see.
So the monthly MISs, it's just by the 7th or the 10th or the 15th, the previous month details have to be sent to a specific email address, and then the team is reviewing it.
Yeah, I see. Okay.
Now, does it make a difference? It absolutely does. But it's how the team and how how we're actually engaging with them, right?
Okay.
I mean, they follow cadence, they send it, but I'm generally talking to the founders every week.
Oh,
Right?
okay.
I'll get a message, they'll call, Gaurav, this is happening, that's happening. The monthly checkpoints that we do, typically by the end of first week or beginning of second week, they're for the founders who are in the Delhi NCR region. It happens in person,
Oh, I
and
see.
then others it happens on the on VC and on calls. But it makes a massive difference, right? Because you have clear visibility and line of sight into what the thought process is, what has worked, what has not worked. You can actually then solve for it, plant some ideas, have some actionables, and it makes a massive difference.
Yeah. Correct. And also, Aroha Venture Partners runs seed UP and new venture programs.
Yeah.
So, what kind of founders are you looking for in these programs, and what makes someone stand out if you want to apply for these programs?
So, the new venture program, where this was the 5th year,
I see. Okay.
and my inspiration for this was, I've always been a member of, the Polsky Center of Entrepreneurship out of University of Chicago runs this new venture challenge. Professor Edward Kaplan's, initiated this many, many years ago. Unfortunately, he just passed away this year. But that program has always been like the inspiration for the New Venture Challenge that the University of Chicago Polsky Center ran was the inspiration to start the New Venture program at Aroa. So every year we open up the applications once. Year one, we got like 40, 50 applications and ended up selecting one company. They're now at 100 crore ARR and EBITDA positive. And the only capital, PAT positive, sorry, and the only capital that has gone into that company was what we put in. Not one dime raised after that. So it's a very unique program in the sense that, really looking for extremely passionate founders who are committed, right? They're just committed with everything that they have. This year we've got 250 to 300 applications. We've gone through the process, we've gone through the virtual shortlisting, virtual pitches. The list is now down to, I think, 8 or 9 companies, where the final pitch will happen, and then we'll announce the 2025 New Venture Program company.
Okay.
We just publicly announced last year's New Venture Program company. We allow them to run in stealth mode, even though the capital has been invested. I mean, there's no rush, right? Or like, we're not looking to make announcements. It's more like, guys, get your product ready and then go out into the market, right? You do it when you're ready.
Right.
So yeah, that's that. Seed UP is similar to the New Venture Program, but specifically for startups that are out of being built out of the state of UP. And as I'd mentioned, state of UP is an LP, so it's sort of a dedicated program that we're running for that region.
Okay.
Be super passionate, identify the problem clearly. And I think, this is one message that I would like to, if there are founders who are listening to this, identify the problem statement clearly, be able to articulate it clearly, and then be able to explain how your solution actually addresses that problem. As simple as this sounds, it's a complicated question. These are not easy questions, and it takes multiple iterations and months to finally identify what the solution is. It can take, once you go down the path, that's what angel and seed investment is for, right? Experimentation, and truly, by the end of that period, you should know exactly what you're solving for.
Right. Got it. And with a lot of these AI coding tools like Cursor and Replit, somebody who's not a coder, can they create an MVP with these coding tools and then apply for one of these programs?
You can. See, the world is shifting, and this is sort of another thing I would like to flag, right? I don't think people realize how quickly this shift is going to happen, and it's going to catch a lot of people by surprise. I just hope more people awaken over the next year or 2 years. To answer your question, I think the tools are getting even incrementally more sophisticated. You'll be able to obviously code in natural language, so you can create an MVP. But I continue to be a firm believer that you do have to have a core team member who understands technology.
Right.
Right? So if it's a business, is predominantly the tech product. Right? And I'm not saying it's a marketplace, this, that. Not things that have been built 100,000 of times already. But I'm saying if it's inherently a tech product and there'll have to be continuous product innovation and a roadmap, those individuals better be full-time, better be in the company.
Right.
Right? You could be a founder who understands consumer really well, understands marketing really well, understands positioning, business development really well. But if what you're selling is tech,
Yeah.
and you don't have an in-depth knowledge of that, there has to be somebody on the team for this.
Right, and initially you made an interesting point because you did your bachelor's in computer science, but I've seen that with Replets and Cursors coming on board, I never thought that it's going to be junior developers who are going to struggle to get jobs in 2025, especially in the US, where they're looking at using Cursor and Replit, and a lot of companies like Amazon and Salesforce are saying that they're going to use these tools rather than hire more engineers. But do you think somebody who's 18 years old who's listening to this podcast, would you advise them to do a CS degree, a computer science degree?
See, look, again, a great question, and let me answer this a little differently.
Okay.
The first class that I took in the computer science program, right, is from a college of engineering. I was taking computer science, right? That was my major. The first class that you took was HTML 101. Okay?
Right.
And this is the year 1996.
Oh, okay.
Imagine HTML, open bracket, you're like, we were typing this stuff. That was the first programming class. Why? Because that's what the tech was.
Yeah.
That was the most fundamental thing you had to start with. The internet had just come up. So if you wanted to put an internet page, put links, you had to know how to code it.
Yeah.
Does anybody even think about that, right? It's shifted, right?
Right.
So similarly, now you fast forward 20 years later, does the computer science programs have also evolved?
Right.
Right? They're not teaching HTML code today.
Yeah.
Right? I mean, most of them are not even probably, I don't know what the programming looks like, but back in the day, you had to be taught what an object-oriented programming language is, right? I'm not even sure that, because there's no contrast now. Why do you need to know that there is no, before the whole idea of an object-oriented programming language didn't exist, so you had to be taught that.
Yeah.
But today, fundamentally, coding just happens that way, right? So the programs have evolved. So what a computer science program teaches today, see, the fundamentals don't change.
Right. Okay.
The tools, the logic behind it, you don't have to think through everything. Today we drag and drop and websites are up, right? So why do I care what the code is behind it? Similarly, now you have tools that you don't start from ground zero, right? Your productivity level is so much higher.
Right.
So should you know how to use these tools? Absolutely.
Right.
Should you understand the fundamentals of what programming is? Of course you should. So I would encourage people, yes. I mean, do absolutely take computer science. Obviously take computer science along with something else, right? I mean, you need to have the ability to think critically, analytically. You need to understand data. So yeah, I mean, my recommendation. And you're training the mind, right? At the end of the day.
Yeah.
What you have to understand is that you're training the mind to think a certain way.
Yeah. Yeah. You learn about problem solving through
Problem solving, right? Logic. A lot of people think logic is easy. It's not that easy when you have to break down a problem and think through it and how it's going to relate to another part of the flow. It's not something that comes natural to you if your mind hasn't been trained on those lines, right? But yeah, coming back, I think that this employment thing is a big area of concern. So everybody has to level up. You're going to see certain sectors especially within tech companies, right? The larger tech companies, junior level positions are not going to go away, but the entry barriers are going to be much higher,
Yeah.
right? Because you have tools that do a lot of things. So we're in this interesting phase where, look, if you have seniority, there is tremendous value.
True.
But if you're stuck in the middle there somewhere, right? That's a scary place to be in. But the good news is you can do something about it. So when I talk about, I've mentioned this, I've been making these comments that 30 to 50% of mid-level professional jobs are not going to exist in my view, in the next maybe as early as next 2 to 3 years. Maybe some will take slightly longer, but within the next 5 years, the way they exist today are not going to exist. But what's also happening in parallel is new roles and opportunities are coming up. So you've got to shift, you've got to recognize, you've got to upskill.
Yeah.
I mean, we didn't have all of these jobs. Like 30 years ago, the jobs that came up because of the advancement in the internet.
Yeah. True.
Right? They didn't exist. These were all new jobs that were created. Similarly, in the world of AI, whether it's on the robotics front, whether it's all kinds of innovation that's happening across sectors, leveraging AI, there are a lot of new interesting roles that are going to come up. So it's not a doomsday scenario. It's just a wake-up call.
Got it. And especially in this world of AI native startups, how should founders, investors think about margins and price sensitivity? Because earlier, you had SaaS companies where it was pricing per seat, but now we have usage-based pricing. So, what advice would you give to founders when it comes to pricing?
Look, early on right now, because the cost. Also, if you look at the last couple of years, right, cost of, let's just say, processing. Let's keep the terminology simple, right? Cost of processing data, etc. All of that has it's been coming down.
Right.
Correct. But it's still expensive. Much cheaper than what it was 2 years ago, 1 year ago, 6 months ago, and whatnot. But still, it's not. There's still a cost component to it.
Yeah.
So a lot of pricing models are based on usage today. Not only per seat, but how much it's being used. You get credits for usage.
Correct.
Right. But it'll have to start becoming outcome-based. Eventually, when the costs, at some stage, the cost will plateau. But B2B SaaS companies, look, I think for a period of time, it'll be usage-based.
Okay.
But then I think it'll become outcome-based eventually.
Okay. Interesting.
But yeah, sorry, let me rephrase that. B2B enterprise SaaS, for a large part, will continue to be usage-based because for every company, you cannot define the outcome and price it by outcome, right? So it's just how you use it, how much. I think it'll remain that way for a little while. But if you look at the professional services business,
right.
Whether it's consulting or law, etc., I think these businesses will become outcome-based. This whole idea of billable hours. Because look, you'll be able to put this entire tech layer and what used to take, I don't know, a month, 2 months, 3 months will get done in 30 minutes, 15 minutes, 1 hour, 2 hours. So now what do? You can't push a bill saying that, hey, we put in 1,000 hours into this. So,
right.
But so long as value is being delivered, you charge for outcome. You charge for the value that you've delivered.
Right. Interesting, because there are a lot of SaaS companies out there in India where their GTM team or their engineering team are based out of India, and they're trying to get customers in the US.
Yeah.
What's the advice to founders? How long should they try to capture the Indian market and then go to the US market, or do you believe they should work simultaneously to win both these markets and get to a product market fit in each of these markets?
Look, see, from my perspective, if it's a B2B enterprise play, right, and you are building a global, the ambition is you've designed the product, you've built it for a global audience.
Yeah.
It really then has to do with how much how big of a war chest you have and where you're going to spend your resources.
Right.
Right? Because I don't think at that point it's about PMF, because I'm hoping you have identified
Yeah.
the gap and it's available.
Right.
It's always attractive to get dollar revenue.
Right.
You know, dollar is worth a lot more than 1 rupee. People are more willing to spend, you know, willingly for solutions. You know, they're not penny wise, pound foolish.
Right.
And it becomes very attractive to start targeting the U.S. market. Especially when it comes to B2B enterprise sales, you have to understand what the go-to-market strategy is. Like, you know, how do you build a sales funnel in a market like the U.S.?
Right.
Who do you have to partner with? Which customers will this product get in front of? You know, those things seem easy sitting all the way in India. You're like, all right, we're going to go there, set up for 2 months, 3 months, hire people. I mean, even if when you're hiring people there, you're not paying what you pay in India, you're paying what you pay in the US, right? So,
Right.
and yeah, and you know, B2B enterprise is a very established, like the way to sell it in the US is very well established.
Correct.
Right?
Yeah.
So to break through, it's you have to operate with the C-suite a certain way. You have to work with you know, consulting firms, product firms, partnerships in a very interesting manner.
Yeah.
In a very not interesting, in a very organized manner to break through. Otherwise, you do a little bit and then you just plateau.
Yeah. Yeah.
And then there's really not much you can do.
Right, and especially when it comes to AI, you know, are foundational model companies good venture bets, or you know, or does the value, especially when it comes to Indian startups, accrue downstream to application layers and integration API?
So, look, I think the foundational layer is an incredible place to do
Right.
to invest, right? But how many homegrown Indian VC funds are there who have the pocket to be able to do anything meaningful in that space, right? Rajan Anandan mentioned, you know, he had asked Sam Altman, right, that can we do this in $10 million, right? Will somebody do it in 10 million? Probably. But it may, you know, but it'll need a lot of other support, the infrastructure and all of that, right? You can do certain parts with less capital, but you know, when it gets to buying the GPUs and all of that, they're not cheap. They are expensive,
Correct.
right? So, and there's a backlog. You can't just place an order today and it shows up. So,
Yeah.
see, so the infrastructure. So if you now break down that, hey, the infrastructure, somebody else will pay for it, but
Yeah.
we're going to build a model on top of that, versus saying that, hey, we need to put in the infrastructure and the model. Then that becomes a difficult thing to do with a lot less capital. I can just speak from our perspective. We obviously can't do anything in the foundational space, right? I mean, we're not set up that way, and it's not even our core. We don't have any sort of expertise in that. But when it comes to use cases where the application of AI, I mean, India is the playground for the world. A market like India is the playground for the world. Right? The level of adoption that has happened here, the level of experimentation that is happening here, the use cases that are coming out almost on a daily basis, it's incredible. And we will have winners in specific in the use case side of things.
Right.
Massive. I think we'll have massive outcomes out of India. And I think infrastructure is really, really interesting as well. The government has been highly supportive. The central government has allocated a lot of capital. They have established cross-border partnerships to make sure that, you know, these are things that everything that is required to enable the ecosystem, you know, they're anchoring. Anchoring it. Now it's up to the rest of us, right, private and large conglomerates, to play a role in that. But yeah, a lot of opportunities. I mean, I think we'll end up talking for another couple of hours if I get into specifics, but But I hope that answers.
Yeah, 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 absolutely. Gaurav, I quickly want to do the top three. What's your favorite business book?
All right, this will be a cliche. It's The Intelligent Investor. But
I love that book. We'll put that in the show notes. And if you could go back in time when you started with Aroha Venture Partners, what is the one thing you would have focused on or done thing differently?
I wouldn't change anything. Not one.
Okay.
That may be a boring answer, but I wouldn't change anything. Yeah, because I just think, look, every step you take, whether it's may not have been the most optimal, could have been suboptimal, but then that triggered something else,
Yeah.
right? So all of these dots, eventually they connect, right? You try to change one, the outcome may have been different. So it what would that have looked like? Would that have been satisfying? So no, I mean, I wouldn't change anything. I think it's been a incredible journey. We just completed 5 years last month
Nice.
on July 9th. I'm grateful that we were able to do what we were able to do with the first fund, and Fund 2 is well on its way. We've made 4 investments out of Fund 2 already. Just extremely excited. And the best thing is that it's something that I intend to do forever.
Nice. Yeah.
Right, so this is not a 5-year play or a 10-year play. I want to invest and partner with startups forever. So,
Correct. Interesting. And do you have any favorite online tool, for example, Gmail, Slack, Zoom, ChatGPT?
favorite online tool? ChatGPT is incredible, by the way.
Yeah.
Right?
Yeah.
If you know how to use it, it's
Yeah.
really incredible. And I think, look, we're all dependent on Microsoft, Meta,
Yeah.
and obviously OpenAI. Right? I don't think we can operate without touching any of these 3 companies anymore.
Yeah.
And it's increasing productivity, and I think people should invest the time in really taking advantage of all of these tools that are now available.
Yeah. Yeah. Absolutely.
And we're also learning, right? We're also
Yeah.
learning along the way. We don't know everything.
Correct. That's right. No, absolutely. Put that in the show notes. Gaurav, what's the best way people can reach out to you and know more about Aroha Venture Partners?
Look, I'm very responsive on LinkedIn. So that's the best way to reach out. I mean, I can give my personal email ID and stuff, but I think it's best to just reach out on LinkedIn.
LinkedIn.
DM. I'm very attentive, engaged with something that I've written. I periodically actually do open office hours.
Okay.
So almost every other month, I will publish a link on LinkedIn, and I open up 15-minute time slots on my calendar,
Okay.
and anybody can book.
Okay.
My hope is that, I mean, I do ask a couple of questions when they're booking it, but I try to make as much time as I possibly can available to the fellow community to just have a quick dialogue, shoot the breeze. If I can somehow add value,
Right.
I'm always happy to. It's always humbling to, I don't care about the level of engagement that happens with my posts, but if it ends up impacting one person, and you meet somebody after a month, 2 months, they make a reference to that. Hey, I read that and really got me going, and I started focusing on this. It's a win.
Yeah. Absolutely. No, absolutely. We'll put that in the show notes. Gaurav, thank you so much for taking our time and speaking to us. I really enjoyed my conversation with you.
Likewise, Rohit, thank you for reaching out, and look forward to staying in touch, and looking at, I look forward to hearing our podcast whenever
Yeah,
it comes out.
absolutely. Yeah.
All right.
Thank you.
Thanks, Rohit.